Good morning, everyone. Welcome back to my channel. It is me, Kadero Hudson, also known as the Wingman. And today, I just wanted to talk to you about stock market news. The stock market took a big hit yesterday. It went down a lot, as you see on the screen right here. The stock market has went down uh, over 600 points. The Dow closes at 600 points. I know if you haven't been paying attention, let me let you know. If you have, let me tell you why it has fell over 600 points. I know I lost at least I want to say over $500 to just of it going down. So if you don't know what's going on in the market, let me be here to tell you what's going on. So before we start, like and subscribe to my channel, share this content because this lovely content. I'm going to be the person to break everything down to show you what's everything's going on into the market, so that you don't have any fears until you at least know what's going on. Yesterday, the Dow Jones average tumbled more than 600 points. It fell 613 points, or 1.81 percent. The S&P 500 fell 1.56%, and it shows right here. I'm going to go over why. Why has the market? Has been going up for the past several days as we go into the new year of 2023. We ended in a downtrend. The market was going down in December 2022. So since the beginning of January, with the CPI, Consumer Price Index, of how much prices of will be paid in rent, gasoline, food, those percentages has been going down, has tapered from like 7.5% to 6.9. I think last I saw it was like 6.1. So the CPI data has been going down. Uh, but why did it increase? Right. So right here it says stocks finished lower on Wednesday. Uh, why? Why? We're going to talk about it. Right here it shows that the S&P 500 index. S&P 500 is the top 500 companies in the United States, all wrapped up in this index. And as you see, since yesterday, of I want to say around 8:30 a.m. Up until now, it's been in a free fall. And right here, it's everyone is worried. Everyone is worried. Everyone's worried. The 401ks has been going down. My dividend portfolio and 401k went down. Uh, are we in a recession? What's going on, Cordero? Can you help me out? I'm here to help you out. What's the update so you know what's going on, why the market is tanking, why it's going down, and do not fear. Do not fear, because at the same time, uh, it's a little bit troublesome, but at the same time, there's light at the end of the tunnel. Let's talk about it. Right here it says that the Dow Jones falls nearly 200 points on the fear that the Fed will over tighten, meaning that as you've been paying attention, the Fed has been increasing interest rates, and they're trying to get the interest rates to over 5%, because they want to try to get the inflation numbers down to they said like 3%. Now we don't know how accurate or how long that's going to work to be able to get the inflation numbers down that low. But that's why. So it says stocks fell Thursday as investors grew increasingly concerned that the Federal Reserve will keep increasing rates despite the signs of slowing inflation. So with the Fed, with them being increasing the interest rates, they've been showing signs in the market of the PPI data and the CPI data uh, actually going down. It's actually showing that it's going down, and that they're increasing interest rates have been slowing the market has been slowing our economy down. But the consequences of slowing our economy down is that people are losing their jobs. So good thing, yay, gets to get inflation down. Bad thing, people are losing their jobs. Unemployment is rising, and as I alluded to it right here, initial filings for unemployment insurance fell to the lowest level since late June. Claims total a seasonally adjusted 190,000 for a week ending January 14th in a decline of 15,000 jobs. It says investors have been parsing through the latest data, and the Fed remarks for clues on how high the rates will go. So the 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 Fed chair, they're like, listen, we're going to increase. We're going to increase these interest rates, and we're going to get this interest rate uh, at a manageable price, at a manageable percentage rate. Right here it says the stock market open today, and I'm gonna show you my portfolio. It uh it already lost like 1.6% yesterday, and then today it started out uh with a negative down like 0.43%. So it's crashing. It's crashing. But why? Uh, right here, I'm showing them in my portfolio right here, and with my portfolio shows that I lost. I'm down $487, and then yesterday I had lost another like $500 in the market, and the reason why is Fed Collins sees that the U.S. interest rates hike uh, will be they trying to increase it above 5%. It's right now it sits at about 4.25% as they're trying to increase the uh, the interest rates, and the slow inflation is weakening the consumer spending. So as what the data shows is that yes, the CPI is going down, the PPI is going down, but at the same time, the economy is slowing down, and the numbers in terms of retail shoppers it came out from December, and it shows that a lot of people didn't do a lot of shopping because of fears of either them not making enough money, them losing their jobs due to a lot of layoffs, and also the uncertainty of the market and of their jobs. Tech companies are laying people off, uh, and the shopping data is down. So good with them increasing the interest rates, it's slowing down the economy. So uh, the inflation numbers are now, it was back in June, it was a peak like 7.6. Now it's trending in the right direction, but bad it's because the economy is slowing down. Right here, the U.S. stocks on Wall Street falls as recession worries resurface. So what happened is that the United States and everybody was like, okay, cool. We are, the CPI data, CPI is going down, consumer price index of how much things are costing in terms of rent, gas, food. Yeah, it's high, but it's starting to taper, down a little bit. Uh, we're going in the right direction, and the Fed is looking like, yeah, we don't have enough data. And so they're like, we're going to keep increasing. So the interest rates right now is around 4.25, 4.5%. And they're like, listen, we're going to keep doing it. And so right here, it shows that Procter Gamble warns of commodity cost prices. Netflix down ahead of quarterly results. The all the S&P 500 is down. Starting right here. The U.S. stock index fell today in worries of a looming recession. That's that word again. So we thought we was out of the recession talk. We're back. The recession talk is back. With the fears of the Federal Reserve sharp interest rates hikes is slowing down the economy, and it's fanned by what? Weak retail sales and manufacturing data. So it shows that uh, the slowing of the economy is showing through weak retail sales. People are just not buying. People are just not spending their money because they are in fear that they're either going to lose their job because of recession talks. Tech companies are laying people off. I see a lot of people losing their jobs, and people are just in fear of just they want to work past this. It says the earnings picture is also looking weak and pointing to a recession. So overall, what all this data is showing is that with the weak retail sales in December and going into January and going into the new year, people getting laid off, unemployment is going up. It's really showing signs of a recession. The market is reading that, and then also retail investors are looking at it like, I'm scared. Uh, you know, uncertainty, and when there's any levels of certainty in the market drops. When there's a for sure certainly going either one way or another. Like certain news, the market will go up. But right now, since it's uncertainty and the market doesn't know what's going on, it panics. Like a child, you're gonna panic. You don't know where your parent panic. And so as I go through all in all, yes, the stock market took a big hit yesterday. Today, is recession talks is looming. That's the big, boogeyman on our shoulders. So what are we gonna do? What are we gonna do? Okay, now we're gonna talk about next steps. What should you do? Should you be afraid? Should you like not invest into the market anymore? Should you take your money out? Should you cry? Should you like, oh my God, like I don't know what to do. Recession? You understand? Guess what? Calm down. I got you. I'm your wingman, baby. Let me tell you how to do it. So what you do is that you still stay the course. So if you've been investing $200, $500, $300 per month, you still do that. You still stay the course, still investing, still. If you've been investing every 2 weeks, keep doing that. If you invest per month, keep doing that. Keep doing the same amount of money, and basically you stay on top. As for me, as for me, I plan on still buying my stocks. And as you see, I'm still going to go at it right here. I'm going to show, I'm going to continue to buy my Best Buy stocks. I'm going to continue to buy my Snap On, my Union Pacific, my McDonald's, and I'm going to continue to spend $500, $750, or $300 per month. And I'm going to continue to invest into the stock market. And as right here, show proof that no matter the months where we have any type of market news where it drops, or like shows you right here, right here, it dropped. The market dropped, went down to, and my portfolio went down to $2,000. Right here, it went down another $2,000. Right here, went down another $2,000. And what do? You stay consistent. You still buy per month. You still buy per month. Still buy into the market. Still buy the market. Because guess what? There's gonna be time in the market where the market goes up. Right here, you see what right here went up to $3,000. Went up to $3,000. So that's what you do. Yes, the market fell big. Yes, there are recession talks. Yes, people are afraid of uncertainty. But guess what? You still stay the course. You still stick with it. Still map out a game plan. You still budget. Save your money. Pay down your debt. Put your $250 or $500 into the market every month, or however you spend your money, and then at the same time, after that, stay consistent, and you will win. You will beat it out. You will beat the market. You will make money, and that's how you do it. So like and subscribe to my channel. If you love great content, understanding of the stock market, understand what's going on in the stock market, learning how to invest, and ultimately want to understand how I invest and how I grow my portfolio from 40,000 to 50,000 to 60,000 to, as my goal to make $100,000, then like and subscribe to my channel. Why not, right? Come learn. All right. Hope you guys have a great day. Bye.